let's discuss a little bit your shift towards Asia. How much have you done in executing this plan?
So over the last 3.5 years, we've spun off our 2 UK businesses and combined those. We just emerged our US business, Jackson. We've raised $2.4 billion with an equity raise, as you mentioned, in Hong Kong, and actually refinanced some debt as well right after. So we've completely restructured and recapitalized the group. It's been a tremendous journey. Hong Kong is now our group-wide supervisor from a regulatory front, and at the same time, this business has grown double digits across Asia and all of its markets. So the teams locally have been executing at an incredible pace.
Does the Asia business model differ a lot?
It does. So the markets we chose to concentrate on, there's a few in Asia we've de-emphasized, but they have structural growth. So, we're talking today in Singapore, most of what we do here is supplemental products to government retirement and government health products. But in most markets we're in, the consumer is responsible for funding their health and funding their retirement concerns, and that's our core strength. So, there's been tremendous demand in these markets for the products and services we offer.
Tell us a little bit about the markets that you have de-emphasized and the others that you are trying to grow into.
Well, part of it's what our competitive position was. So pretty much now you see us in every major market in Asia and then 8 markets in Africa. So those have the structural demand we want. So again, not that the business in the U.S. or the businesses we had in the U.K. Weren't highly competitive, but those markets are relatively low growth, right, relative to the markets we see here. And when you look at GDP growth, when you look at emerging household net income, all these things drive, and of course health demand with COVID is up materially. So all these things drive demand for the services we have.
But of course, Asia is attractive to everyone, right? We are seeing the likes of HSBC, OCBC all try to get a chunk of this market. How do you compete?
Yeah, so we've been here 100 years. I mean, in Singapore, we celebrated our 90th birthday this year. So we've got tremendous talent, market leadership positions in most of our markets, top 3 positions in almost every market we're in. So we have, over 500,000 agents with the largest bank distribution network at 26,000. Now we have one of the largest and most successful health ecosystems with Pulse. So 31+ million downloads of our health app and the technology around it. So we start with a market leading position. And that's unique, and it gives you a position to do things at scale that new entrants have a little bit more challenge doing.
I was going to ask, because you emphasize the technology and the digital shift here, but at the same time, we have seen that fintech growing presence across Asia, which also means that there are insurance products being sold through digital channels. So how are you positioning there?
So there's, I was here last week for the fintech event, and every time we've been the sponsor of that since it started. We get tremendous partners out of it, innovation, and every year someone comes up and says, "We're going to displace your business. My company is going to eliminate banks and insurers," and they're great challenges, and they're wonderful conversations, and there's some really interesting innovation in that. But when you start with trust, when you start with 17 million client relationships, when you start with those sorts of advantages, if you're willing to adapt your business model to technology, you have an advantage. And we have regulatory permission, we have investor permission, we have capital, and we have consumers who trust our brand. It's 170+ years old. So that's ours to lose if we don't execute correctly, but it's an incredible advantage in the tech space as well.
When you're talking about partnerships, does that also include perhaps more mergers and acquisitions in this space across the region?
So it's 47 tech partners, for example, just on the Pulse platform alone, and some of those we have a little bit of capital tied up in, but we're not looking to produce unicorns. This is really to produce an open architecture that we can plug in and out the best services for our clients on longevity and health, and move from just and to postpone and actually prevent illness, not just insure illness. On the acquisition side, we have put about $6 billion in the last 8 years into Asia in organic and acquisitions, mostly on distribution. And there's really not anything big on the horizon that we see. We've been very public. We'd like to invest more in our China JV with CITIC. It's one of the most successful and fastest growing life companies in China. Small scale, but it's if you look at the market data that's out again this month, it's outperforming the market very nicely. And we're very excited about that, and I'd love to own more of it, and they know that.
China is also, of course, a bit of an uncertain market, especially given that we continue to see these regulatory issues, maybe changes in policies as well. Is there anything that's affecting you there, or that you think could be potentially challenging in the future?
No, I'd say most of the regulation you're seeing out of China, I spent a fair amount of time there in a non-COVID environment, but I think most of the regulation that we see around our space is well telegraphed. So the government wants insurers out of the bank space, out of the shadow banking. They want them, investing in it long term, right? And they want them well run, well capitalized. That aligns with our view of risk. The new issues in China, the new opportunities are, you have 300 million Chinese that will be 65 or older by 2025. So this private pension pillar is critical to both the government to get right and business. That's our sweet spot. We've been in the pension business for, again, centuries, right? The other is GBA. So the inclusion of, you've lived in Hong Kong, the inclusion of Hong Kong and the Greater Bay Area and cross-Bay products and services, so Wealth Connect, Insurance Connect. Again, we have licenses and permission and brand across that area, and that's a really big event for us as well. So there's a lot of opportunity in China. None of the current regulations actually conflict with how we're executing, so we're pretty comfortable with that.